What's going on, fellas? Happy Friday. How we feeling?
Friday.
How we feeling? How we feeling, Brandon?
Is it a happy Friday, Brady? I don't know about
It is
that.
a happy Friday. Bitcoin's on sale, 84K. How you guys feeling? A nice dip to sort of cleanse the soul a little bit of our maybe hyper bullish energy.
It's
How's it
spring
going?
cleaning.
We got some volatility after a very up and to the right year. I mean, so much going on. I think we'll get into it, but I think so much of this just comes from other markets. And
How are you feeling?
how am I feeling?
Yeah.
I'm good, man. I'm good. It's you learn to navigate these things over the years.
John, are you afraid? You feeling any fear in the belly?
To anyone who may or may not have texted me and said, what's going on with Bitcoin? My answer would be the thesis is intact. That would be my answer. Really, nothing has changed for the Bitcoin thesis in terms of long-term holding Bitcoin, all the good things that Bitcoin brings about, all the reasons I care about it. Nothing has changed. If you want to play the game of, all right, what does the macro picture look like? What is policy going to look like? What is short-term volatility going to look like? Yeah, that's a different story. And I think a lot of people probably got caught a little blindsided with a big dip here. But two different conversations. So
You're feeling
those.
okay. Brandon,
I'm feeling okay.
How you doing, man?
I feel nothing. Been through the volatility so many times. Honestly, it doesn't even faze me in the slightest. Probably not true in 2017 or 2021, but after a while you get hardened to it, and I feel nothing. I am very happy though that I got my tax return back recently, and I got to contribute to my Roth, and I got a much better entry point than I was expecting. So
Nice.
consider me happy.
Nice. Yeah, this show actually started in March 2020. Right before we launched the Swan product, the very first edition, which was just just recurring bias. That's all it was. But a couple weeks before we launched the product, the COVID crash happened, and we wicked down below $4,000 in 2020, guys. And there was some panic, there was some fear, there was some anxiety going on in the Twitter timeline. And so the next day we just decided to go live with like 5 of us, 6 Bitcoiners, Gigi and John Vallis and Guy Swan were there. I think Brandon may have been there. Corey and Jan were there. And the next week we did it again. And that was the birth of Swan Signal Live. So here we are. Welcome back. Happy Friday, everyone. Appreciate you being here. Thanks to Mara for supporting the show and for securing the Bitcoin network. We appreciate you. We're going to get into this price action today. If you are relatively new here, this may feel a little anxiety inducing, and that's totally understood, totally normal. We've all been here for 7 or 8 years and been through a lot of this stuff. So we're going to go through the charts, go through the numbers. Remember, the fundamentals have not changed. So let's take a look. We'll start off with our friend VJ Boyapati.
Just real quick before we get going, I just want to come out on the side of like, by the way, I do feel things when this happens, and it's okay to feel things. Like I think you get used, in my opinion, you get used to feeling things.
Yeah.
I'm not saying that other people don't have a different experience, but like, if like I think there's either you have a lot of your net worth in it and it's a big swing, or just like you have your views about what the future looks like in the short term. And no shame if these dips are, challenging or, whatever it is. I mean, and we'll get into it, but it's also like volatility is the price of any top performing asset. And it's a unique skill set, right? I mean, I really think that investing, and even if you're just holding one asset, is actually a skill set that takes years to build up.
No doubt. Let's see what VJ has to say to kick us off. VJ is the author of The Bullish Case for Bitcoin. He's been around for a very long time in the space. So he talks about how the media is hyperventilating here. Maybe some investors, especially if you're relatively new to Bitcoin. So he goes through and takes a look at the cycles. So prior to the SEC capitulation, which led to the ETFs, there was a big run up, lots of bullish energy. But then we spent 8 months chopping sideways last year. We all thought maybe this is it. We're gonna, break the all-time high and run up to 100K. A bull market has started, but no, it was 8 months of kind of brutal chopping across. You can see here the chart. The largest drop during that sideways chop was from 73K to 53K, is about 27% drawdown, close to where we are, what this dip has been. And then it finally ended after the presidential elections. We went basically straight from 70K to 90K plus, and ran up really quickly, all the way up to 108. So again, sentiment became super bullish, and now we're getting our dose of reality, as Bitcoin price does with its volatility during bull markets. And so maybe we are in for another round of chop here. Maybe we bounce back up and then chop. We'll see. But we're seeing this sort of phenomenon here of prolonged chopping periods in price. So, guys, any thoughts? Any other chart you want me to jump to right now?
I'll just say, and I'll kind of add to what a little bit of add on to what Steven was saying. There's people are definitely feeling things right now, and I think it's important to not beat yourself up too much here, because there's definitely an alternative scenario that easily could have played out. I'll just pick a simple one. It's like Trump gets inaugurated, maybe not full on Bitcoin strategic reserve, but like some flavor of it gets adopted more quickly than what actually happened. And then Bitcoin's going to 130K, at some point in the month of February. Like that absolutely could have happened. And, we didn't get that. And now we've got this sell-off that we're dealing with. But there's no sign in the sky that tells you guys, hey, on this date, 108 Bitcoin or 109, whatever the recent high is, like this is the time to take some profits. So you're never going to get that right. And then on the way down, nothing's going to tell you, hey, this is where the ride stops on the way down. Here's where to get back on. So just, remember that. Even professionals who do this for a living, it's kind of like baseball. You have some batting average that if you exceed the certain batting average, you're doing well, but it's far from 100%.
It's a skill, and it's a really interesting. I honestly think it's like one of the more full person skills in today's world. Like there's a lot of things to learn that are, learn how to hit a ball, learn how to run. These are physical tasks. I think investing is kind of interesting because it is like a combination intellectual and like full system emotional skill. And I think there's very few things that like reaching proficiency at require the same systems,
Strong agree here. If you look at our human biology, how we're wired here, we're wired to FOMO the tops and panic sell the bottoms. And so everyone innately comes to markets with that hardwiring, and you have to override that somehow. Some people are naturally gifted at overriding that. Some people have to train it, other ways to get there. But I fully agree. It is a skill. It is not easy to achieve. And yeah, you see it on the charts.
Yeah.
Pukes the bottom. And then that the recent newcomers who buy the top and they puke the bottom, that always marks the bear or the end of the bear. And that's psychology showing up on the chart.
Yeah, absolutely. Been through this a lot, and it is a skill that you develop. It takes effort to build conviction. That effort is educating yourself about what's going on here. And then you'll hear this recommended all the time from Bitcoiners. And this is why Swan started and built its product with the first feature being recurring buys. So just buying every day, every week. Really, it's every week is fine. It has about the same returns as a buy every day over a long period of time. So you buy every week and just add to your stash and just have it happen automatically, right? With a service like Swan. And then you don't have to worry so much about those dips and panic selling and trying to time the tops and the bottoms, etc. It takes a lot of mental energy and emotional energy to try to do that. So just having a recurring buy, average out those dips, average out those FOMO tops, and that's really the best strategy here. This is a long-term asset. It's going to be around for a long time. It's going to continue to be adopted and used over the next decade, 2 decades, more and more, which means Bitcoin will become more valuable, just as it has for the past 15 years. And it's not nearly reached its adoption saturation yet at this point at all. It's still relatively early. So just buy regularly, set it, and just chill. That's the advice here. But it is also reassuring to kind of look at past performance and kind of to understand that this is normal, right? So here's a chart of 2025 versus 2020. You can see here that the cycle, the cycles repeating themselves tend to have these kind of chop periods, big rises, big dips, and then it catches and just kind of consolidates again for a while. We could be in this for a few months. Who knows, maybe longer, before it ends up breaking the now all-time high at 108K. But this is, behavior we've seen in the past with the Bitcoin price. And here's another chart of the cycles. Some people are pointing to this saying like the cycle is broken. I see, here in like on the purple line, I see a nice dip before the big run up. I see dips. I see basically exactly what's happened in previous cycles. And yeah, this is something I think that I find a little bit reassuring as well.
Can I comment on this chart here quick?
Yeah.
Just for data abuse purposes, I think what this chart misses is it's starting time 0 on the x-axis from the halving. However, this particular cycle, we got news of the ETF early, so we had a run all the way up to the start starts at 65 or whatever. Yeah. Most of that run was on the heels of the ETF stuff.
Correct.
Yeah, correct.
Yeah, this looks, you technically would start this as coming from like mid 20Ks all the way up to the mid 60s where it starts.
Yes, this is true.
On one hand, 100% agree. This is kind of not an accurate way to compare these data sets. On the other hand, like I'm not a cycle. I'm really not a cycle believer at this stage. And I think they're just like this idea that Bitcoin is just going to endlessly repeat this pattern. I'm a skeptic of. There are big, and just like we had this, it had never run up so much before the halving before, but it did. It literally ran up 100% because of the ETFs. Then it ran up because of the election. And then it's down now. Why is it down? It's down because every global asset market is down. There's a panic gripping financial markets. Brady, could you post the tweet about the Mag 7, the stock performance from the highs? So I did this quick calculation this morning. So, Bitcoin's down. I mean, we're at 85, like, call it 20%, call it 25%, whatever you want to do, wherever you want to measure from. That's basically on par with, these were the best performing assets. Google's down 20%, Nvidia's down over 22%, Tesla's down 45%. That one's a little idiosyncratic. Amazon, Microsoft. These were the best performing assets. Volatility on the way up means volatility on the way down. Palantir is down, one sec. This is pretty enormous, from 124 to 82. So that's even more than Bitcoin. So basically, if you had the smart decision of buying any of the best performing stocks in the entire country, you're down roughly similar to what Bitcoin's down right now. And that's why I want to say that this is just, you're really just part of a larger markets movement that has, there's been fear because of tariffs, growth slowing down, inflation. And while I'm skeptical of some of those fears, certainly investors are reacting.
And just to add a little bit more data onto what Steven shared. So those names, they're down big off of the recent peak. That's obviously true. But if you look at the 12-month return for those assets, like it's still wildly positive.
Yes.
And so just wanted to throw that out there. And then if you look at like the market as a whole, so the S&P 500 is down like 5% below its 52-week high. QQQ is down like 7% below its 52-week high. Gold is only down like 4% versus its 52-week high. Not surprising. Gold's not going to move around that much. But yeah, I don't view this as like, oh my God, it's a market-wide bloodbath. Like this is more of a rotation of stocks that did, not stocks, whatever, Bitcoin, mostly stocks and Bitcoin that have done really, really well that are taking a breather here. I don't think that necessarily means like, oh my gosh, sell the Mag 7. They're not going to do well anymore. But things don't go up in a straight line forever.
No, And it's a rational point for a pullback. I mean, Bitcoin was trading in a range for several months. It didn't have that upward momentum. There was no immediate short-term catalysts, and it's under pressure with the rest of the market. And so this kind of brings us to, so basically, I mean, I would frame the story that's driving the selling as, Trump's going to trigger something approximating a recession, a growth slowdown. They're going to stop spending money. There's going to be both a government spending stop, and there's going to be a tariff-driven kind of recessionary impulse. My counterpoint to that is I think it's a hard sell for me to think that this administration, which is coming in, that has a lot of different broad goals, is going to be willing to take, they caused a recession within the first 2 months, will be so incredibly unpopular and will make every single other political goal that much harder to achieve. Usually people are like, there's a political put, like Trump wants to see the stock market do well. And he has signaled that that is not how he's thinking of it right now, which is part of what's driving these fears. Scott Bessent, the Treasury Secretary, Trump, Stephen Moran, they've all said they want to see stocks lower implicitly. But I think they're talking the market where they want to see it, rather than some sort of I don't think they can actually tolerate S&P 500 down 15% for an extended period of time. So, you've seen the 10-year, or so the 10-year yield increased substantially following the election, and it has now given back all of the increase in the yield, which is what they're looking to see. So they're getting the outcome. And I think eventually this story pivots. And, I think that's the next leg up for assets.
Give a quick shout out to the chat. Like hanging out with you guys. Coffee Girl's got it figured out. The reason I have conviction and hodl long term is through study, by listening to Swan and many podcasts, books, and all that was critical to conviction. And that's exactly what we're talking about. It takes work. Hodling is simple, but it's not easy. So props to you, Coffee Girl. You got it figured out.
One more comment on the psychology, piggybacking off of that. Going back to March 2020 when Swan Signal Live was born, I remember watching it break below 4K, smash buying every dollar I could get my hands on. Hey, wife, do you have any dollars in any accounts? We're plowing it all into Bitcoin today. And doing that, I was terrified. Those were the scariest emotional buys maybe ever in Bitcoin. And looking back, they were the best buys I've ever made. And the buys that I make when I just plow everything I have in and the market's ripping and I feel so good about it, those are always the buys that are the worst entry point. So whatever your body feels, the opposite is usually the best decision.
Well said. And I do want to pose a question to you guys, just to, I think we may have implied it quickly at the opening of the show, but let's just do it explicitly. Is there anything that has changed your big picture thesis for Bitcoin in the last 7 days? Any of you? Any news item, market action, commentary from a big name person? Like, is there anything that would even register at that level of affecting your long-term Bitcoin thesis?
I mean, the fundamentals are exactly the same as they were 7 days ago, as they were 30 days ago when we were at 100K plus, right? So no, the answer is no.
I think the only updates are you're pushing out any sort of SBR probability to the 6 to 12 month zone rather than a near term. And you're also having to price in how serious are they about fiscal reduction? Is there going to be a short-term material reduction to government spending? I think no. To be honest, I don't think it's actually successful, but I could understand some people pricing in, some sort of slowdown there, which again is a, it's a short-term issue. And my answer with both of those is to say, I think there are two things that have changed, but they're not the fundamentals and they're not the long-term thesis.
Yeah, the only thing that has me worried is a couple of dividend investors are dancing on Bitcoin's price grave right now, and that kind of gets me to shake a little bit in my boots. Just kidding.
Totally rattles your conviction. One data point I'll give just on the idea of the budget that Stephen raised. So I'm in New York, as many of you know. Bitcoin Investor Week is a conference that Anthony Pompliano put on this week, and there were a bunch of big name people who spoke there. I did not see him open up the conference, but I heard this from several friends who were there. Maybe he was going for effect to open up the conference, but he's asked the audience, how many of you think they're going to balance the budget, the new administration? I think two hands in the whole room go up, and he says to the audience, he's like, you're all wrong, they're going to balance the budget. Again, maybe he's just going for the dramatic effect, but he's a voice out there who actually believes they are going to balance the budget. From what I heard, I don't think he had a really well thought out thesis of what that means for, do I want to own stocks in that world, or treasuries, or Bitcoin, or so, I don't know if he went that far with it, but I just wanted to share that it's, the Bitcoin Investor Week conference that happened in New York. And that's what Pomp is out there saying.
My friend Daniel tried to get him into a bet on that point.
What was the bet?
If they actually have a balanced budget at any point in the next 2 years, then Pomp wins. And if they don't, then Daniel wins.
Ain't gonna happen. The last time we had a balanced budget was the 90s with Clinton. And imagine having a moderate Democrat that was able to work across the aisle to accomplish that fact, and paired with a very bullish economy on the back of the internet stocks.com, all that stuff. So I don't see the combination of a roaring economy, especially for, talking about tariffs, which, can be beneficial long term, but short term, it causes a lot of stress and on the economy. And I don't see the ability to balance a budget in a world where we're putting tariffs onto other countries and, not necessarily seeing the kind of economic growth on the backs of tech right now. So in 2 years, I definitely don't see that. I definitely agree that SBF is definitely is decreasing in its chances.
Did you just say SPF?
SBF. Yeah. SBR, sorry.
SPF was tweeting about employment.
I know, and that's when we started dumping. SPF.
Oh no.
Yeah.
It's true.
Checks out, right?
Yeah.
I think the SBR is a lower chance of happening at all. Definitely longer term. They gave us a 180-day timeline, so let's wait and see what comes back from the crypto AI team, and we'll see what happens. I think it's probably more likely now to get a sovereign wealth fund and maybe add Bitcoin to that than it is to get a strategic Bitcoin reserve now.
So what I've heard from some people that are now, well, this is a theory, but so there's something being talked about that they may take Fannie and Freddie public. Like the U.S. may basically IPO Fannie Mae and Freddie Mac, and then use the initial proceeds from that to fund the sovereign wealth fund. And then, yeah, maybe they throw a couple percent into Bitcoin.
Yeah, fascinating. I definitely had not heard that. Let's go through a couple of these. Here's the market sentiment, guys. We talked about how we're feeling and about hodling through the fear, and how you could, grow conviction just by educating yourself about what's going on so that you can hold on during times like this. But the market is in extreme fear, with Bitcoin at 84K right now. It's probably at 80K or so when this was published. So there's definitely fear out there. We get it. Let's take a look at where we might end up. This is a chart that shows volume on the left here, buy volume, and you can see there were tons of buying, back and forth, buying and selling happening in that shop from March all the way to November last year. And then we just, rallied up with these giant green candles after the election. There wasn't hardly any trading happening there. And so the idea here is that it's called a Checkmatey, who's kind of an on-chain analyst, calls this an air pocket, where we don't really know what the demand is at this level because we didn't stay there for very long. So maybe we end up actually falling through this air pocket, which would be putting us down to about 72K before we make another move back up. So just set your expectations. That obviously may not happen. But here's a kind of a reason that I think is, a valid sort of way to evaluate Bitcoin price and what might happen in a chart, which is kind of a fundamental reason. We didn't trade a lot there. So there's some discovery to happen, and maybe there won't be a lot of demand there as well. I don't know. Let's take a look now at
Brady, can I just offer one thing on this one?
Yes, of course.
I just want to say, don't kick yourself if you're looking at this like, oh, why didn't I see this in the charts? Or, why didn't the Swan Signal Live guys alert me to this? Now they're talking about it. Like, clearly the price was going to go down to 80K. Why didn't they tell me ahead of time? We don't want to come across as if we're saying that.
We do not know. We're not people who work on the charts, but there's some chain analysis that can be useful to look at. And if you're feeling some anxiety, it's listening to people like Checkmatey or Dylan LeClaire, or some of these on-chain analysis people might help.
It's a lot of hedged. If you listen to them, it's a lot of hedged language. It's like, look, we could retest this level. Like, if we see softness in the market, here is where we might find support based on the chart that Brady just saw. But again, let's just for a second consider an alternate reality that could have easily played out. It's like SBR, some sovereign wealth fund, happens a lot more quickly. Zuckerberg finally wakes up and says, yes, I named both of my goats after Bitcoin, and I'm putting $1 billion of Bitcoin on Meta's balance sheet. It's, the UAE finally comes out and says, yeah, we bought 300,000 Bitcoin. Any of those events could have happened when the Bitcoin price was 98K, and it could have taken us to 120 or something. So it's not like it's a guarantee that we go back and test this level. It's more like if there's softness, if there's no reason to propel the bull market, if there's weakness in other assets, then like this is a level we could come back to. And that's exactly what happened here.
Yep.
I'm my personal view is you don't see it go that low. I think we've had a huge, material drawdown with no bounces so far. So I think the next move is almost certainly up. And I mean, it's been that way since this morning. We got as low as 78. We're at 84 now. It's like a $7,000 candle. So I think the next move is we see a bounce, and then the question of further downside to new lows, I think it depends entirely on what happens in equities. So if you see the S&P put in another 5% down, yeah, we're going into the 70s. And if you don't see that, and you see positive momentum, you see yields coming down, you see maybe some of the tariffs not going through, that would be a big one. Then I think that's the bottom. I mean, I think we put in the bottom at 78. Maybe you retest it once, who knows? But I think it requires continued deterioration in equities to crack new lows, which could happen. I'm not making a call on whether that happens or not.
And just to reiterate, here's the numbers. This happens in Bitcoin. In the run up to 20K in 2017, we had drawdowns of 41, 38, 29, 34, 41, 40, and 27%. And in 2021, in the run up to 69K, dips of 21, 17, 31, 26, 55, which is a big one, and definitely had us worried. A lot of people worried anyway, and 25%. So we're right in that range. Even going down to 72 would be within sort of normal past price behavior during bull markets. So that's thanks to is this Siegel? Yeah, thanks to Siegel for bringing this up. And finally, we do have some reasons to be bullish here. You can't fade the McRib chart. So whenever the McRib leaves, we tend to have a run up. So we'll see what happens. And we of course have our favorite
MicroStrategy. Okay, look, I say if you want to own Bitcoin.
Like this, just the context. This is from January 27th when we were at 101K, right? Whenever it's the reverse Kramer metric. So whenever Kramer says buy,
MicroStrategy. Okay, look, I say if you want to own Bitcoin. I own Bitcoin. You should own Bitcoin. Bitcoin's a great thing to have in your portfolio.
There you go. So we're just waiting for Kramer to say sell. We'll be good to go.
I'm a hater on the inverse Kramer. He's got a basically failure rate of 64%. So he's right 45% of the time. He told everyone to buy Bitcoin at 16K before it went to 60,000 in 21. Fair. So I know you're not a diehard on Kramer, but for
Definitely
the
not. It's just a fun meme.
it is a fun meme, but for the audience, it's like
Yeah.
I wouldn't over-index.
No, I don't take either of those seriously. I just put those in for fun.
He has so many calls that it's like just become pure noise too, right? Like he just says buy this at this time, so it's like a broken clock, right twice a day.
It's also just like there's a time frame thing, and I think this is interesting just to help people think about investing, because he makes a call on TV. It could be 2 months ago and we're down. But the thing is I could have told someone at 90K, you should buy Bitcoin. It then went up to 108. It's now below 90K. Was I right or was I wrong? Over a long enough time frame, it'll trade both below and above the vast majority of price points. And so like, I do think the other thing working against him is just if you have to make a bunch of public calls every day, the market will almost certainly trade opposite of that at some point in the next 6 months.
We'll get him on the show when one of us can't make it. He'll join.
I actually had a call with his one of his guys for like a couple hours once in 21 because they were actually like trying to do a whole story. They were very skeptical of they basically thought all the stable coins were I'm talking about someone well known, so I don't want to say fraud's probably a tough word, but they were very skeptical. And I had a whole like 1.5 hour kind of debate with a guy associated with him about how these systems work. It's pretty funny.
Nice. All right. Anything else on macro, price, hodling, education on that front? Oh, I can share this real quick just to verify. This is the number one concern. This is a really small chart, but these are concerns regarding cryptocurrency. And on the left here, it's like, I don't have any concerns. It's hard to trade. Lost access to the Bitcoin. Worried about cyber attacks. Worried about trusting exchanges. Worried about governments, taking it over. And then unstable value is by far the biggest concern regarding Bitcoin and crypto. So yeah, we know that this causes some anxiety out there when these kind of dips happen.
I personally don't want a stable value of Bitcoin, but maybe that's just me.
Well, let's talk a little bit about volatility. I mean, MicroStrategy has rebuilt its stock around selling Bitcoin volatility. No. And they want to increase volatility so that you get, traders buying and selling options, etc., get a lot of action on the stock. So why, maybe hear from John or Steven, Brandon, like, what do you guys think about volatility in terms of investing? Why could it be good? Why could it be a good thing that Bitcoin's price is volatile right now?
For MicroStrategy specifically, I think they're kind of a unique case where they are attracting pools of capital that like and need volatility. I think that's a little different from whether Bitcoin likes and needs volatility. I think Bitcoin is volatile more so based on the fact that an emerging monetary asset that's relatively not understood is just going to be volatile. It's like, I forget who was it, Alan Farrington or someone. What would it look like if an asset was monetizing from scratch? And it's going to be volatile. So I think Bitcoin's kind of like volatile just based on its nature. MicroStrategy kind of is intentionally using that volatility to attract pools of capital that actually want it and need it, whether it's the convertible bond investors, convertible bond arbitrageurs, preferred stock investors, the options traders, people who want, both long and short, selling covered calls, buying calls. So yeah, a little bit, the kind of volatility of Bitcoin, I think, means different things, and it comes from a different place versus the volatility of like MicroStrategy. So yeah, those are just some the thoughts for me, but I'm sure Steven has something too.
Yeah, no, totally. I think there's a way where I'll talk about the range, like the range we were stuck in. I think when you have an asset that gets kind of range bound like that, you need volatility to keep going. like it's it could be higher or lower, but getting some volatility is how you're going to get the next move and how you're going to move along. And I think like when you're like just trading between like 92 and 100K, there's no urgency for anyone to put on a position. There can be people that want to buy, but they're waiting. They're waiting on a sideline. And there's a reality that like sometimes assets need to come down to open up an entry for the next wave of capital to come in. And so I think it's like, it's a more constructive way to look at it, that like sometimes you do need a bit of a down move to get the next wave of buyers in.
Yeah. Volatility is the price we pay for the gains we want.
So volatility also shakes out weak hands, people who don't have conviction, right? Because they'll panic sell into the market, and the people who are buying those big dips when you're down 25% plus, everybody else is scared and lost faith. They may get out and wait to see what happens or whatever. But that's being bought up by people with conviction, and that kind of sort of sets a new price floor, because it's all that Bitcoin, not all of it, but a lot of it's going into the hands of hodlers who aren't going to be selling it anytime soon. So that's another reason the volatility helps with Bitcoin. You kind of flush out the weekends, build up a base at a lower price, and you're ready to go up next. So
100%. Go ahead.
No, I was just gonna say, like, some of this doesn't even. This is not just Bitcoin. Like, I forget the number, but Amazon stock has fallen a bunch of times by more than 50%. If you look at how many times it's fallen by more than 25%, that's a significantly larger number. So these statements apply to a lot more than just Bitcoin.
Yeah. These big seven, the Mag 7 stocks that really drive the returns in the equity markets, all are volatile as well. They see huge returns, days with huge returns, weeks, months with huge dips, and then they come back up. So it's a similar phenomenon here with Bitcoin.
Yeah, just piggybacking off Brady's comment. On the way down, weak hands are shaken out, and then long-term holders rebuy the supply, and then they are sort of guarding the floor there, so it makes it easier to go up. And on the way up on the volatility, let's be honest, pretty much everyone enters Bitcoin the first time in a raging bull market, and they buy the top. Yeah. And yeah, many of those folks leave, but that volatility is what attracts the next wave. And then hopefully we do a good job educating them and they stick around. But I think it's important here to share a PSA around volatility in Bitcoin, more on the personal finance side, because it's very easy to get excited and take on some leverage, or manage your family's budget with $0 in reserve. And I think that that's a mistake. And so I'm essentially going to argue that you should have an emergency fund. You should have dollars on the sideline. If your goal is long-term accumulation of Bitcoin and you want to hold on to it long-term, you absolutely need some dollars to manage your personal volatility in life. My basement flooded last winter. It was like $15,000, $20,000 to get it repaired. If you don't plan ahead with some dollars on the sideline, well, then you end up selling Bitcoin at the bottom. Maybe you have unexpected taxes and you have to sell now instead of planning ahead, right? And so don't get over your skis, stay humble, stack sats, and yes, I do recommend some dirty fiat.
And
yeah, that's a good point.
I know you learned that lesson once with the taxes.
I did. I sold a coin embarrassingly around 20K. Brings great shame to my family and my future heirs. And I learned my lesson. So don't learn your lesson selling the bottom. Learn your lesson by intellectually understanding it.
Absolutely. So we've got some interesting developments in the meme coin space, and speaking of doing a good job of educating people, where people throw shade at Bitcoin maximalists and that we're entrenched in this ideology, and we're not thinking about the future. The tech is old, and we need these are all ideas that people who are in the crypto space, the meme coin space, etc. Kind of throw at you, like, you guys are Luddites. What are you doing? You just hold your Bitcoin. You want your shiny digital rock, and that's it. No, that's because Bitcoin maximalists understand that almost all this stuff are scams or fluff or vaporware, not going anywhere, without manipulating, tricking people, false promises, partnerships that don't pan out, that you hype up. I'm talking about Ripple mostly here. And let's this is interesting to me. I think we've seen a definite change in the mainstream media. And I love the fact that kind of Bitcoin education seeps into the mainstream media. Brandon and I were talking about this the other day. The word fiat was not being used by the financial media until Bitcoiners, started talking about sound money and fiat money, because we had to, it needed a word, and fiat means, by decree. So it's a money that's just issued and run by the decree of one or a small number of people, the government. And so that's just one example, but we've also seen a change in the use of the word Bitcoin and the use for the word crypto. It's Bitcoin and crypto now, or Bitcoin or crypto. Bitcoin is a separate thing. I think we've largely succeeded at, we tweet all the time, Bitcoin, not crypto. Two different things, fundamentally different things, almost opposites to be honest, in the approaches. Long-term vision versus short-term vision. It's just the amount of liquidity that's in Bitcoin versus crypto, the legitimacy, the fact that Bitcoin is like an asset, an assets being embraced around the world in the global economy, and being discussed and seriously considered, right? That's not happening with crypto. The meme coins have completely shut off basically at Pump Fund. So let's just take a look at these few. All right. So last month, 24,000 meme coins issued. This month, 11,000. Last week, 2,000. This week, 517. Yesterday, 186. You can see meme coin production falling off of a cliff.
Meme coin production is a hilarious term, by the way.
They're just producing these things at Pump Fun. They pump them out, and here again, just falling off of a cliff. 79,000 coins have under $100,000 market cap. Absolute complete rugs. And the charts on these almost all look the same. They pump straight up. That's why it's called Pump Fun. And then they go straight down. 250 coins of $1 million market cap. 40 have a $10 million market cap. 4 at 100 million, including Fartcoin, ARC, ACT, and Peanut. I've never heard of these. And so, yeah, you can just, these meme coins are, why do you guys think this is happening? What's behind this phenomenon? Why have people seem to just stop issuing these meme coins? Why is the market collapsed completely?
The casino is dead. I think the Trump meme coin launch put the top in, and I think the Malay scandal killed it. And it's been an embattled market for a while. I mean, there's a list of horrible things. I don't just mean like people lost money. I mean like drugs, deaths. There's really some atrocious things that have been associated with the meme coin pump fun era. But it's extremely extractive. It's extremely zero sum or negative sum. It's been a race to the bottom of just extracting wealth in the scammiest way possible. And, I think that what happened with Malay just put that on blast for the world to see. Our whole it wasn't like a whole country got screwed, because I don't actually buy that many Argentinians bought it. But, it was so visible. And I think after that, no one's willing to touch it. And it has swiftly headed to zero. And Solana is down 50% on that, because this was the big kind of narrative of Solana, is they were capturing the speculative activity, and it lost 50% of its value in a month. And this was the single best performing crypto asset after Bitcoin. It really was doing okay. Ethereum has not done okay this cycle. Solana was doing okay. It got decimated.
Yeah. Ethereum was the manufacturing hub for the cryptos. It's an old coin. It's been around for a long time. So most cryptos up until recently were built on top of Ethereum. The meme coin craze happened on top of Solana. But these things, the platforms, they're not contributing to, like Stephen was saying, they're not contributing anything to this economy. And they're just manufacturing gambling tokens, and even worse in the crypto era, just straight up lies and insider trading, pump and dump stuff. So that's the biggest coins in the crypto space, which two of the biggest, Ethereum and Solana. That's all they did. They just manufactured scams.
Yeah, I think as far as I can tell here, there's very little new money entering into the industry right now and going into these meme coins. And so if there's fresh new hodler or new crypto people trying to get paid and they're bringing in their new money, then you can keep these scams going for a long time or these casinos going for a long time. But as soon as that's not the case and it's just traders versus traders, insiders versus insiders, then it's just a game of hot potato, or the meme coins are lava. And I see traders on Twitter measuring their holding periods in minutes or hours. And you got to get in and out in 45 minutes to make your money in these things. And that's obviously a sign of depleting energy here. And good.
And I think there's something to be said that the casino analogy is almost too generous for some of these. Like,
Yeah.
at least when you play roulette, I'm not that big of a gambler, but like roulette is like, red's 48% and black's 48%. And then like the middle is the casino. So like they're winning more than 50% of the time. Right. But like there's still a good chunk of people that are winning when the board hits red. And like, even though you lose, like you see a guy that's like celebrating because he won, and some percentage of people are walking out of that casino as winners. This is like vast majority of people are losing money. Like there's just not that many success stories. So eventually it's like you decimate your own investor base, and like that can't go on forever.
Yeah. And it's actually less fair than a casino. Like we have regulations and rules, and we know that there's maybe only one game you can play in a casino where you have a relatively like even advantage, which is poker, because you're not playing against the casino itself. You're playing against other people. You got to pay the dealer a little bit for the privilege of sitting at the table. But with these cryptos and these meme coins, it's 80% insider token. Like 80% of the tokens are held for insiders. 20% gets sold in a big hype machine. And then this happens in a matter of hours with these meme coins. It has happened. Like it's goes straight up, insiders sell, goes straight down. That's it. Completely and totally rigged. Like you have a better luck at the roulette wheel for sure.
And John, you had a great point there that it's like you're I saw this analogy on Twitter, so I'm repeating it. They described it as like it's like a casino where they put a little bit of fentanyl in all the drinks. And so like, yeah, it keeps people coming and playing, but eventually like a percentage of all of your users die and they're gone. You're constantly depleting them. And I mean that's a real dynamic of like, if somebody loses some money in Bitcoin, they're generally like, okay, I'll buy more lower. When someone gets like wiped out doing meme coins, eventually they just walk away. They either lose all the money they're able to bet, or they get disillusioned. And so it's like very net negative.
Just go like vibe check. Go and watch some crypto influencer channel on YouTube versus the vibe here on this channel, right? Like Bitcoin is not a get rich quick scheme. We're not telling you that you're going to get rich right away. We're telling you that you got to hold on for a long time, educate yourself. It's a don't get poor slowly scheme, as Bitcoin developer Jameson Lopp puts it, meaning as the fiat money gets debased, right? You're getting poor slowly through inflation, relatively slowly in the United States because we have the global reserve currency, but maybe much faster in other parts of the country. So Bitcoin is just be patient. It's going to be more valuable in the future as it gains adoption. It's just you're not going to get rich quick. You got to get in, you got to put in the work, and hodl for the long term.
I agree. I think that's the primary psychology for the casino traders. And you tell them just stay humble and stack sats and, make sure you have a surplus and buy Bitcoin, and over the long term you get paid, and it does not land. And so I think it's a symptom of deeper financial nihilism or something approaching that, where if you don't have any hope for the future, you want to just YOLO it all and you'll probably lose, but you're looking for a lottery ticket. And that's a sad, sad state for our country.
And I think that's right. I agree with you wholeheartedly on the financial nihilism of not believing in anything, of thinking. I do think that's descriptive of like the people that are really into those markets. They think all markets are fundamentally extractive because they can point to fraud and extraction in equities markets or whatever. They just say, yeah, it's all a scam, so it doesn't matter what we're doing. I think that's part of it. I think the other part of it that I do think is worth addressing is a lot of people do it because they don't think the returns will be high enough in Bitcoin. And this might be because they only have $10,000 to invest or $5,000 to invest. And now I'm not telling you like, hey, don't do that. Don't put that money into Bitcoin. But I can understand, like, there are some people, they're young, they don't have a lot of money, they just want to take a lot of risk, and maybe they have a small chance of making a ton of money. And the thing I would say, the message I would give to people like that, you'd be better off buying call options on the Bitcoin ETF or call options on MicroStrategy. Like, you could, like, again, I'm not recommending you do this, but if you're convinced you need to take more risk with a higher return, there are Bitcoin denominated instruments that you can do that to that are going to be so much, you're going to have such a higher chance of being successful relative to meme coins. And now that's not financial advice. And again, I'm not telling you to go buy these contracts, but like, meme coins are not the path.
I agree with that. Like, that's the derivative of what I'm talking about. The coming to the conclusion that you must either get rich or die trying in 1 month, in 1 year. That's the concern I have. And if you come to that conclusion, I wholeheartedly agree. Stay away from the shitcoins and buy leveraged Bitcoin.
So it sounds like MSTR options. It's like the nicotine patch. You're trying to quit smoking. Look, man, cold turkey's really hard. I know you can't just go into spot Bitcoin right away. You need a little bit of excitement. I got MSTR options for you.
Love it. See, we've got you covered. If you're a trader, you really need to trade, gamble a little bit. Yeah, we've got some even more volatile options for you that are Bitcoin based or Bitcoin derivatives. we will take care of you too. Anyway, so guys, what else? That was the end of the docket. Anything else to toss
we didn't
into
hit
the mix?
BlackRock, right? BlackRock.
Oh yeah, that's right.
Portfolio recommendation.
Yeah. Where did that one go? We're just gonna have to talk about it. Here we go.
So yeah, it's a relatively quick one, and probably most important thing to keep in mind here is that there's not just like one voice for BlackRock. They have so many people. They are the world's largest asset manager. I worked for a large asset manager, GSAM, Goldman Sachs Asset Management, multiple $1 trillion asset manager. You know, even within GSAM, there's many different investment voices, and all the time you would see an article that says Goldman Sachs says this, as if there's like one unified view coming out of Goldman Sachs. That is not the case. There's so many different pods and sub teams that come up with their own recommendations, market calls, whatever. So keep that in mind. It's not like BlackRock from the top down is saying everyone in their portfolio should do this, which I think it says here. Yeah, you see in the second part, while that's a small subset of BlackRock's entire model portfolio business, it goes on. So it gives that qualifier there. With all that qualifying it, this still is a big deal. They're still coming out and saying, hey, explicitly, we recommend you put this percentage of your portfolio in Bitcoin. So this is kind of the dominoes falling, and I think they will gradually fall over time. You'll see more and more legitimate, large, big name investment platforms come out and say, yeah, it's totally normal to do this. To the point where at some point, you're going to be weird for having 0 Bitcoin in your portfolio. It's going to be like, yeah, I have at least, 3 to 5%. That's the world we are heading towards.
100%. And I think that BlackRock news item of them adding it to the model portfolio, that is the fundamental trend that we talked about. Fundamentals. We talked about, what changed, what didn't change. That's the sort of stuff that's really exciting to me. Like, that is the underlying long-term adoption of Bitcoin as a store of value. And that continues steadily without the volatility.
All right, good quick hit. Any other quick hits?
I've got a quick hit on the Pelosi tracker stuff. So Nancy Pelosi and her husband have a net worth of like several $100 million, and senators get paid like a couple $100,000 a year or something like that. So she obviously didn't make her money from her salary. Then there's some internet sleuths tracking all her trades. I'm sure most of you have seen this on Twitter, Nancy Pelosi stock tracker or something like that. But one of the guys behind it was on Tucker's show this week, and I heard some of that. And it was just wild. So they built an app where you can follow on trades. So you can trade like Pelosi. They've accumulated $400 million of retail money following all of her trades based on what they see in the filings. And so I just think that's another sign of the times type situation when our elected officials take, and by the way, how does she trade so good? Because she outperforms all the hedge funds. Well, she takes her material insider information that she acquires from her station in politics, and then she directly trades against it. And it's just a disgusting display. Just looting the empire and shamelessly doing it. So
this is not like, this is an illegal thing to do, right? This is insider trading. There's other rules against, more specific to lawmakers.
correct.
They cannot do this. So why doesn't this get enforced? Why don't these get enforced? And these politicians just stay there, and so many millionaire politicians.
This is why I'm a supporter of the Singapore model. And I think what you do is you pay every congressperson $2 to $5 million a year, and if they do this bad behavior, they get executed.
Oh my God.
Like, carrot, you're rich. You don't need to do fraud to get rich. If you mess up, like, we will kill you. I'm not saying Singapore actually does it. It doesn't, but like, they're imprisoned. They're like it's over. Like, GG. Like, you're in prison for life, heavy punishment. And it's just like, because I do think there's a world where, let's be honest, like in the world of like politics and high business, like 200K salary, it's like it's not a big salary for these people. There's going to be way more money flying around, being bribed with, being thrown. If you need to pay them more, so that's not so tempting. And I think like the flip side of that needs to be relentless, unforgiving punishment if you're caught doing these things.
I think that's reasonable. Quid, you mentioned Tucker, so I'll just say this. These clips were circulating like Monday or Tuesday, which feels like ages ago, but Luke Groman spoke with Tucker. We didn't hit it on it in the show, but just as a quick hit, there were a couple of really good clips of Tucker having the realization that like every Bitcoiner has had at one point or another, multiple realizations. One of like, oh, that's why gold has been money for thousands of years. Or he had another realization that was like, why would you lend to the entity for the long term who also dictates the value of the underlying currency and manipulates the interest rate? And you just see Tucker like light bulbs going off. So if you're ever wondering like, how early are we to Bitcoin? Why don't more people get this? Whatever your personal opinions are on Tucker, he's a historically knowledgeable guy, like undeniably, right? So someone who has his level of historical knowledge is kind of a novice when it comes to money. So just to me, it was an eye-opening experience seeing Tucker go through that learning in real time.
100% agree. He didn't understand why gold was
grabbed
money.
his head.
And then he did the Tucker laugh too.
Yep.
Sorry, Quidam, what were you saying?
Oh yeah, he didn't understand why humans converged on gold. Like, had no concept of the idea that monetary assets have properties that make them good or bad. And yeah, it's a very, very optimistic thing for people who think they missed out. To your point, John, I think that's such a profound point here.
All right.
Quick note, just we're looking at we're an hour from the stock market close, and we got the S&P up 0.63% after going red today. So it's a nice recovery going into the end of the day, especially because Friday has been a big sell-off for weeks because Trump kept surprising with tariff news over the weekend. So seeing this is a decent, it's a decent move. I think probably up over 1% from the low. Could give some relief going into the weekend. And if it stabilizes, I think we're in a decent spot. Bitcoin's approaching 85. And something else that caught my attention, just for listeners, Metaplanet stock is down 55% in 5 days, which, if you're a bull there, I think that's a pretty interesting opportunity. I mean, my God, what a move.
Volatility
one last quick hit,
everywhere.
actually. A GDP estimate from the Atlanta Fed came in with a massive drop today. Estimate from the inside the range of this blue chip consensus, which is a survey that's done and has not been done for a couple of weeks. They only come out every couple of weeks, so we'll see where this one ends up. But you can see the Atlanta Fed has adjusted their expected GDP estimate from just above 2% to a negative 1.5% GDP for Q1 of 2025. So this is a sign here that perhaps we're going to see some economic decline. And as we were speaking about earlier, this kind of thing, it's kind of a macroeconomic, umbrella, a bigger picture here can definitely affect Bitcoin price in the short term. So
do you know what the trick is in this?
What's that?
Do you know what the trick is here?
What's the trick?
This is nonsense. And it's the reason it's so low has to do with inventories. So basically what happened is the way this is balancing like exports versus imports, right? And so if the US is like importing a ton of stuff and exporting very little, that brings the GDP measure down like tremendously. And so what happened is because of the tariffs, all of the dealers, they imported like crazy to try to get ahead of the tariff, and it completely blew out this
model.
Reading. I my bet is statistical noise, and when those actual forecasts come in,
Reversion.
Yeah, it's relatively in range. Maybe it's down a little bit.
That makes sense. That's a pretty shocking number.
No, and I mean, it threw people for a loop earlier today. And the only reason I even know that is because I spent some time looking into it after seeing the number, because I'm like, economies don't swing that fast. They don't go from like, God, they don't move 4% down in a quarter. I don't care what's happened. But like, I think for listeners, and I think you'll see, and it backs it up. Like the S&P's up over 1% today from the lows. That wouldn't have happened if that was full economic recession within the next month.
Yep.
That's an interesting point. I had not looked into it to consider the import-export relationship kind of front running the tariffs. I think that's plausible. I think it's still, if it remains to be seen, this is GDP now. This is not like an official GDP print. I think if GDP does print something pretty bad, it remains to be seen whether the market as a whole really looks through it and says, oh, this is just an import-export front-running tariffs type thing. That might spook some people, and it could set off a sell-off. I'm not saying like, an absolute crash or anything like that, but it would be harder for me to be bullish on risk assets if there is a big negative official print in GDP.
I agree. No, I if that actually comes to pass, I 100% agree that's a curveball for the market. I think there are differences in how those two things are calculated, but we'll see where it goes. But yeah, I'm a skeptic on that number.
All right, we'll wrap it up there, guys. Thanks so much for joining us, everyone, in the YouTube chat. If you're watching on YouTube, or even if you're not, come over to YouTube, to the Swan Bitcoin YouTube channel, and go ahead and subscribe. We're adding 6,000 or 7,000 subscribers every month at this point. Great Bitcoin content. There's tons of like evergreen Bitcoin content, educational stuff on the channel as well. If you scroll down on the main page, we do this live stream every Friday, 11 a.m. Pacific, 2 p.m. Eastern. Hurley has his show on Tuesdays and Thursdays, which are the way that I catch up on the news of the week. Fantastically produced, great shows. So check out the Swan YouTube channel. Subscribe. If you're watching the video now, please give it a like so we can spread Bitcoin education. We are from Swan Bitcoin at swan.com. You can find our app in the app stores. Just search Swan Bitcoin. You can buy Bitcoin. You can set up a recurring buy. You can set up a Bitcoin IRA. You can set up a collaborative self-custody vault with Swan Vault. And you can also work with Stephen and John in Swan Private for businesses and high net worth individuals looking to, add some meaningful Bitcoin allocation to their portfolios. So check out swan.com for more information there. Again, we'll see you next Friday. Thanks, everyone.